Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the Forex market. So today we take a look at the euro currency as usual, but also just briefly consider the situation on the Great British Pound because it shows similar patterns as in the dollar index, as in the euro currency, and actually you could choose right now if you're an intraday trader and you're considering taking the scalp long position, you could choose what you like more, Great British Pound, euro currency, because although generally they are the same, there's some minor difference exist there. So currently the dollar index market is closed, and the performance that we will get right now before the open in today's session, it might have really not significant impact on the dollar index chart. I will show you. So first of all, if you take a look at the dollar index, you could see that here's the hand shorts that we're talking about, and that's the drop that we were expecting. So market mostly has formed the right arm. I don't know whether you trade the dollar index and whether you take in position here or not. But today, based on the charts of the euro currency and Great British Pound, we could see some calling and flirting around the bottom of this right arm before the action could start. Because this action mostly stands due to the recent data from the employment market. So first it was JOLTS, second it was ADP, so they are showing some weakness, and here's you could see the reaction. Mostly the pattern is prepared for trading, and the next logical step should be kind of the ABCD extension to the upside. Here's everything goes with the plan of our bread and butter weekly trade that we are still considering on the dollar index in an area around 105.50. And 618 resistance on the whole downward action. This is the classical by the Napoli target of the bread and butter. But the difficulty stands in minor nuances where you should take position right there, especially if you trade on the euro and Great British Pound. So that's what we're considering the report. So on the daily chart of euro currency, we do not see something really special. We just see this bounce and some signs of the bounce that euro currency finally starts showing. So we were waiting for a couple of sessions. On the 4-hour time frame chart, we also have fib levels that we intend to consider. And we said, well, most probable that we will be focused on 108.55. It's just because this is previous lows might be retested. And in the current circumstances, too deep retracement seems not very logical, especially as the pattern on the dollar index is already ready to go. So correspondingly, we are focusing right now on this level as a potential level where it could take the short position. Why theoretically your currency could reach it? Mostly because of the same reasons. As we said, probably job reports will become the major driving factors for any market in this week. So that's why, well, common payrolls report might be the second part of this rally. So if it indeed will show the same trend as the ADP numbers, it's very probable that we could get some upward continuation. And on the hourly chart, finally some signs of the bullish pattern starts to appear. So recall what we said, yes, the keep an eye market should break out of the channel. Most probable that it might be the hand and shoulders. Just because here we've got the butterfly to the downside. This very often becomes the part on the hand shoulders. And indeed, take a look at here, we have pretty nice reversal swing. So we have the market breaking the tendency of low lows, low highs. Usually it shows deep retracement after that. So we'll see right now. So maybe even it could move slightly deeper. And then we should get the next extension. Let's take a look at the OP stands 108.44. Which is very close, just 10 pips difference to this level. 618 XOP stands 108.83, and 108.83 coincides with the 50% level in between of these two. So which is actually your currency favorite levels, 108.83. So that's two levels we need to keep an eye on. Once again, if you would like to go short on euro currency, but you are not sure that you will be able to catch these entry points, especially in the turmoil of the data releases, once again, we could say that you could consider maybe scalp entry. So market will start moving higher. You could just add take a small position, 50%, 20% of your normal trading lot. If market will reach the OP, add a bit more. See when the pace will be. If it will get just fast skyrocket action, you could even miss the OP or take a little one here, waiting for the XOP performance. And on average, if you will just take a look, you will get the position somewhere around 108.40, 108.50 area. So that will be quite nice if indeed we will be correct and market will keep going lower then. For scalp traders, as I said, since we're going to deal with these hand shoulders, you can consider taking scalp long position with the stop somewhere below the 8 point. But take care about the payrolls report, so it will be definitely driving factor, and you will have this risk of the volatility and doom and gloom on the data release. So this is also not for everybody. Now a few words about the Great British Pound. On the cable, we in general have the same pattern. So if we take a look at the hourly chart, that's the same hand shoulders that we have. If you like to trade Great British Pound more, be my guest, so you could trade the Great British Pound. Besides, on the Great British Pound, take a look at interesting performance on the fall time frame chart. Here we have nicely looking reversal session, so it's pretty significant. So you can see this long-term tail below these lows, market taking out the lows of the previous candle and closed above the top. This is reversal bar, which gives not bad chances on these hand shoulders as well. At the same time, you could see that the XOP has not been reached, and that stands in a row with our expectation that later downside action should be reestablished, just because of the patterns on the higher time frames. So that's approximately what we have on the euro currency right now. Choose the scenario and trading plan what you like more. Wait for data release, wait for high standing levels to position taking, or average your position. If you're a scalp trader, you could consider taking the scalp long position based on the same expectation on the payrolls and with the targets around 108.50, the same levels. So of course, it's preferable to wait for jumping. So always better to take the position in some predefined levels, but not everybody just could do this. And averaging of the position and scale in, it's a good decision in general, but of course not right from this point. So it's better to wait for some starting of the upward action. So that's actually our 2 cents. Let's see what we get on the data release.